Weekly US unemployment aid applications have fallen to 340,000, cutting monthly average to a 5-year low. Joining me down the line to discuss is Peter Bruin, economist with ABN AMRO. Peter, the drop I mentioned comes ahead of today's report on February's job growth. How confident are you that this is an optimistic sign for the US economy?
Well, overall, I'm fairly confident, and I think most people are looking at the initial jobless claims in particular with a bit more interest because of the release of the non-farm payrolls report later today. And I'm fairly confident that we'll see a modestly positive labour market report this afternoon. That said, I don't think that today's report will show a very sharp uptick in hiring. This is because when you look at the 4-week moving average of jobless claims, despite the recent improvements, the 4-week moving average was roughly the same from the January to the February survey week. So we're therefore forecasting 150,000 gains in employment for this afternoon.
Some analysts are saying employers have been undaunted by that budget impasse in Washington as sales rose and that the labour market is, quote, steady as she goes. But where was this confidence coming from?
There seems to be quite some strength in the private sector at the moment. For instance, it can be seen in the ongoing gradual labour market recovery, but also in the housing market recovery, but also private investment, which is actually doing relatively well at the moment. Even though there are quite some fiscal headwinds at the moment, we think that during the course of this year, the private sector will overcome the weakness induced by higher taxes and spending cuts.
Weekly applications are deemed as a proxy for layoffs, so can we take this as a sign that less companies are shedding off staff and that more hiring may follow?
Yes, I think that's the correct interpretation overall. However, you should take into consideration that the outcome of a non-farm payrolls report, for instance, is of course the sum of the amount of people that have been hired and also the amount of people that have been laid off. So the initial jobless claims only tend to look at the amount of firings or the amount of shedding of staff. So it's only a part of the total equation.
On Friday, Washington triggered $85 billion in across-the-board cuts for the remainder of the federal fiscal year ending in September. According to some, sequestration should not be the doomsday scenario that Washington is describing and that these are very minor cuts. Do you agree with this?
Yeah, well, that depends a bit from what angle you're looking. The cuts in itself indeed represent fiscal consolidation of around 0.5% of GDP, which is not that much. However, I think you should realize that we already saw a reversal of the payroll tax rate, also that taxes for wealthy families have been raised. In total, so both the rise in taxes and the spending cuts represent fiscal consolidation of around 1.8% of GDP. And that's actually quite a lot.
You mentioned tax cuts on the wealthy. According to the Federal Reserve, household debt rose at 2.5% annual rate in the fourth quarter. How will these factors affect consumer spending in the months to come, do you think?
We think that consumer spending, and particularly in the first half of the year, will be constrained by the rise in taxes, so we're therefore forecasting fairly slow spending. However, in the second half of the year, the drag from the higher taxes should slowly start to fade, and that should help spending to rise at a bit faster pace. And we think that that pace will continue to accelerate going into 2014.
The NFP report is always eagerly anticipated, but just how much of a market mover could it be this time round?
An outcome which would be in line with our forecast would be roughly in line with the consensus, and therefore I think would not really have a very big market impact. Obviously, non-farm payrolls figures are one of the most important figures, so if you see a positive surprise, you tend to see a relatively big impact in markets, and of course also the other way around. But again, we're looking for 150,000 gain in payrolls. That's more or less the consensus and should not really jolt markets.
Peter, thank you very much for your time today. Well, that's all for our NFP preview, but please do click back to find out if the figures meet Peter's expectations. Bye for now.